Good morning, everyone. Happy New Year. And we start off with a little down move right off the bat. Well, we knew it was coming. We'll see how far it goes. We certainly got the technicals set up for it, which has been the case. Just holiday time, I guess people away, no one was interested. But you got a weekly chart of the S&Ps here, like 1, 2, 3, 4, 5, 6, 7, 8, 9 green bars in a row. Slowing momentum, narrow range bar, piece of cake in a sense, with a narrow range bar to break the prior bar's low. We'll see if it happens on a closing basis. Maybe it will. I thought maybe, markets consolidate like they did the last week or two, maybe making that one last stab toward a new all-time high for the S&Ps. But if this continues today, that doesn't look like it's going to happen. But maybe in 2024, we're going to get that. What time? Anyway, so far we're starting out with a red bar, sell setup. More of a climactic sell setup, not a sell setup, bearish sell setup. Let's make that clear. Anything that goes up at some point, it pulls back. Daily chart, major support is close by. Within striking distance of even today, just looking at the size of this bar. And so when I look at average size bars, and looking back at what happened and just looking at the largest bars, and you see, well, coming off of the load, a big one, a big one, a big one, and now the first big down one. So could it reach this major support today? Sure. Then as we look to the left and say, as far as the S&Ps go, they cut through this pivot. Now it's a greater than 100% retracement. It does create a void up above, and it's just consolidating here. So, after a drop like that, it's not bouncing, it's stabilized. And, as I look at this, it's like, why would I want to, unless I had a significant maybe break of this low and rip right back up again, why would I want to consider it scalp or long? I'd rather see it come all the way down here and that set up some type of a tradable bounce because it's in an obvious place of support. It would have fell quite a distance to get to that area. And then you start looking for your lower time frame pattern to confirm your bias of that's where it just at least attempt to bounce. And the question is, do you want to play the short side from here? You could, getting a green bar ignored here. It's chopping around. Still pre-market. It's extended to the downside short term on these time frames, but where you got to put a stop would be right above here, or right above here, give or take. So, it's still early. See how this unfolds. NQs almost down to support. So as we look at these different markets, and this is what we do every day. So as I'm talking about the S&Ps, and I'm saying, okay, they, for them to come down here, and then I look at the NASDAQ market, and it's almost there. So clearly, this is showing relative weakness, but the same idea. Once it gets down here, there'll be buyers. Because I've already got my alert a little bit ahead of that pivot low. There'll be buyers. So if this should push down here, S&Ps may not get down there initially. So you got to keep an eye on both of the main markets. And of course, then, keep an eye on the Dow. Always look Dow futures, NASDAQ futures, S&P futures, Russell futures. And so Dow, I marked that off a week or so ago. First bearish wide range bar, now getting a reversal. This is far from that support. So this is showing relative strength. It has not violated a prior bar's low. So some strength here within the Dow. I haven't looked at Dow stocks, but I'll do that later. And the Russell down a couple of days, coming down to major support. It's got room to move lower. So with that, there's no one on our typical conversations. Um, see what regional banks are doing, see what biotech is doing. Both, if not almost everything you look at is short-term extended higher and vulnerable to a retracement. Just that things, as we all know, don't go up forever. And this was a very large move. So the good part is, as we go and look through many different markets and stocks, there were many significant moves in the end of the year that came out of consolidations. Got a nice list that shared in the letters of stocks that are not to be bought at this point, but have been beaten down over a couple of years and got nice long bases and had nice moves. And we'll see how many of them turn out to be outperformers in 2024. Right now, this looks like prices have come down to support factory work. When it gets down there, we'll see what it does. And so what we'll be, that's the wrong one. It's the right one. It's the current contract. So what we'll be looking for is this area of support. Do prices close below it? Now, this isn't marked as a pivot, but it's a big wide bar. So it's got to be a pivot in a smaller time frame. So while it's not marked with a PL, this is a significant support area. And you can see how the momentum slowed down, which initially I thought, well, holiday time, nobody's around, not a big deal. What does it do? One bottoming tail bar could get this thing pushing back up. But, right now it looks like, from my point of view, it's got to come down here where buyers are going to be more comfortable giving it a shot. We'll see how that unfolds. Take a look at the ETFs, where they're gapping down to. So that's filling. You can see the crosshairs there. That's filling an unfilled gap. There's lots of unfilled gaps, and it's gapping down. Looking at the weekly chart, close to the, what was resistance being support, but charts like this, it's got to come down further. Maybe into this gap, give or take, where it might stabilize. So, and this is what in the next few weeks, what we'll be looking for is all of these, whether they're indices or stocks that are in uptrends, and as they correct, do they stay above their major support levels? Do they stop at moving averages, consolidations, and just what we've been doing for decades, just the same thing, where you got an uptrend like this and looking over different markets and stocks and see what shows relative strength and relative weakness, and of course, which sectors and so on. One of the main ones that'll be focused on is semiconductors, which did really well. And of course, technology, we'll see how much they correct or the lack of. Just looking at where that is, give or take. Bitcoin's up. So something I didn't know that they did, I'm not a big Bitcoin follower, but I just read that something they're doing called halving, where they're going to, and I didn't know they could do that because I thought everybody owns Bitcoins, but I guess there's a float out there of unowned Bitcoins. Anybody that knows how it works, welcome to share it, but where they're going to reduce the supply of Bitcoins by half. And by doing that, supply demand, the belief is it's going to drive the price up to about 80,000. So I made note of it. You see this little note down here? Because I'm always interested to see, this kind of big news comes out, not big news, but news of, I think of that significant, predicting what's going to happen in 2024, just to keep it in mind over the course of the year that there something of significance is expected to happen. And that was one of the themes of the advisory letter this weekend was I listed here are wide expectations for 2024 of what investors and institutions are looking to happen. And with that list, any one of those things could be a disappointment or come to fruition and drive the markets up or down. So, we'll see how this one plays out over the course of the year. So David is saying, so it's like the dollar now and can be manipulated by someone like the Fed. Well, I suppose the Fed could obviously affect the market, of course, bond market, of course. But remember, when we talk about interest rates and currencies, you've got banks and other governments involved. So while they may be able to push it around in the moment, I wouldn't get too caught up in thinking, they're in total control by any means. But what's moving the markets this morning in part is, which we've been talking about for a long time, as the 10 years been coming down here and looking for this to stabilize. And the conversation was if it went up, that's going to put some pressure on the markets. Now it's like, okay, it's up. So the market reacts. Is it a big deal yet? No, it's expected. How much does it go up? So let's say it gets to 4.2%, just making up numbers here, comes back down, just jiggles around down here. That'd be good. That would be good. The dollar, the chart is still messed up, but you could see it's gotten a pop here higher. So that is pushing a little pressure on the market. Oil, we talked about this being at support. It's up a little bit. There's some news just jiggling around. So there's the negativity on the market. We'll keep an eye on the transports to see how they do today, but everything is near resistance. Well, this is near resistance because it's got more stocks than the real transports, which you can see is down below there, but rolling over. All right, SPX. So this is down here. I'm just going to look at spiders again. See, they're beginning to stabilize a little bit. They're right on that bottoming tail bar on the top of that red bar. And so now, they're here. Last I looked, the bottom strike was down here. It's below 4,700. That's a good thing. And you've got this pivot low here, major support. So as the market opens, usually what happens is, the stabilization now often will give way and there'll be a drop. And what I'd like to see is it drop down here and then see if we can get juice. If it happens quick and there's juice down here, at a lower strike, it'll be a no-brainer. The upper strike, it's above this high, so it's probably doable right off the get-go. But I usually like to see what happens in the first couple of minutes, which way they jiggle. But those are the premiums if you're doing like 20 wide or a little bit more are doable. Internals, nothing new. Sentiments at an extreme. Breadth's backed off a little bit. That's really not a big deal since the market was chopping around. But you can see the equity, really punched through the upper bands where the total did not. So everything is set up for the markets to correct a bit. We'll see how far it goes. I wouldn't get too bearish too fast. Because that's just the first day and a little reaction based on intermarket relationships. And, things could flip back the other way, but we'll see how it ends the day. All yours, Dan.
Good morning. Happy New Year. Yeah, that's interesting, Kerry. I just read what you said there, and that's very different than what I thought Greg said about, they've always been saying 21 million is the total population, and I don't know how many are mined already, but let's just say it's half. I thought Greg was saying the remaining half. They've said, "Oh no, we're going to cut that remaining half in half." But yeah, you that it's totally different what you just said. It's the prize that you're getting is cut in half. So it's like you're mining for a pound of gold, and now you get that same pound of gold or oil or anything, a commodity, and now you're only going to get half the value. Um, so this is a miner, Mara. They've been on a tear. But yeah, as I'm saying this, I didn't know how these miners were going to react, because now these miners have to work the same amount and they're only going to get paid half. Interesting. Yeah, well, exactly. Well, was it more profitable, Robert, because it was easier to mine? The further you get down, the harder it is. Um, so anyway, all right, I got a couple of alarms going off here. Actually, we have coin on our weekend list as a call spread under Friday's low, and I actually like this gap up. I like it a lot in terms of a call spread because there's no trigger unless it's Friday's low, and ideally we close the day with a bear 123. Pelletier alarm went gapping down with the market. We bought puts on this Friday. Nice head and shoulders pattern. Looks good. Costco alarm. We have a call spread on this. Looks good. Papa Hotel was in the weekend letter as a put spread over the highs. Kroger alarm went off, break out of a bottoming pattern. Snap alarm, call spread under last week's low. So that looks like a good go. Cart alarm. This is a recent IPO. Like this thing got, whoever bought that opening IPO price, look at that, 41.88 or whatever. Um, they're not doing good. We actually had a little long on it here. Thinking it could have been a long-term bottom. We made money on it, but you see, short-lived bounce. So that's another sign of garbage distribution. All right, I don't have any earnings. Let's just look at my miscellaneous list. Dan Niles was on CNBC talking about his favorite things for the year. And interesting, you mentioned KWeb, which is the Chinese internets. Yeah, and it's hard to tell how much of this gap down, who the heck knows, for whatever reasons. But it's obviously a culmination of all traders' rationales, bonds, uh, Iran sending a warship now into the Red Sea, and window dressing. Now you can sell the losers. Yeah, who the heck knows? But anyway, I kind of like this K-Web. It's not ready for prime time, particularly with the gap down here. But I'm going to start watching it. Apple got a downgrade. 188. Gapping. Yeah, gapping right to major supporters. We'll keep an eye on Apple, obviously. T Court is a bio. Lost a wow, that's an ugly cap. Man. Lost a patent lawsuit to Tiva. And Tiva's flagged, but Tiva's a bull flag. I'm gonna set an alarm at 10:55. A U uniform downgrade. That's a call spread idea if there's any juice. Asmel, something with restricting shipments, China related. That could be a call spread, 30-minute low. These couple of EVs reported deliveries. I also saw, I didn't read it, but saw an article in the journal about, the short sellers coming after a number of these companies. EV, the unprofitable EV stocks. I don't think they should say unprofitable ones. So wouldn't it be easier just to focus on the profitable ones? That's, Green Deal nonsense, forcing, just let capitalism work on its own. All right, so I don't see anything to do in any of these. Nothing to do. All right, I believe it or not, I don't have a big watch list. This is kind of small for me. And we did not go crazy in the weekend letter ideas. We got some longs and shorts, but a number of these aren't going to trigger now, like Microsoft. Last week's high we had as a put spread, but that ain't going to trigger. Netflix, last week's high, put spread, that's not going to trigger. So I don't mind the bullish ones being posted. Boeing, we have a call spread in the letter on this. XLC alarm. So we're in trail mode on this in our ETF letter. IWM, I think we had as a call spread. Rocket Man is a Climo. You could start off with a day trade short, Climo, daily, weekly. That thing is, wow. This was a beautiful gap here over these two red bars and then beautiful consolidation. Wow, that was a nice long right there. Maxim, we're long stock, so we're just in trail mode. Coin we talked about, AZN, AstraZeneca had a favorable mention in Barron's, but gapping down. Baidu, I was watching as a bottoming pattern, but gapping down, so that won't trigger. CXW, I think I got this from McGraw. Look how the 20 MA is flat. It's in a trading range, but you got a rising 50. There's nothing to do yet, but it's strong. Now that the market's gapping down, I'm going to set an alarm at 1463. Which, all right, look, I already had one at 65. GPN over Thursday's high, I like. Kroger, Friday's high. Tango Whiskey, last week's low. AES, last week's high. Jabil, Friday's high. CCJ, it's a sloppy double bottom right now. But it's on support. I actually have this as a short idea with this void over here. I just want it to go sideways more. RTX shows it only down 19 cents. I'm going to set an alarm at 84.40. RTX. Snap, we mentioned Pelletier, AME. It's strong, but we've been talking about strong stocks for 2 weeks now about getting on board a moving train. But the musical chairs, they're all susceptible to pullback, so I'm not going to be interested in most of these. MA, I see one print at 4.25, but if it can take out Friday's high. AT&T, hey, that's holding beautiful in 15-minute charts. That's the best potential day trade long I've seen so far. And let's wait. I usually wait 10 minutes on Mondays. So maybe 10-minute high. That looks beautiful. And then for a day trade, the stop would be down here, 1673, whatever. Under this 15-minute base. A BBV. Now, this is what I said. It's either bullish consolidation or it's an M top. But as of right now, it's bullish. Well, T2, Friday's high. I like as a put spread. DEA. I like it Thursday's high because then it'll be a multi-bar turn buy setup. LBS, bullish trading range above the 2050. I have an alarm at 49.40. GTN. I had a deep inside bar on Friday, but if it can get back above Thursday, then it looks fine. GoDaddy's a Climo here, but holding like a friggin' tank so far. Ideally, we want what I call a something something bar. I want a gap up rejected. I want a topping tail. I want something to prove that it's really a top first bullish consolidation. And said, gee, if it can get it has to get over last week's high, and then a put spread idea. All right, 929. I just went through my whole list. So I'm done. And Alex, your AT&T is the best long that I see. Kroger I like too. It's a swing trade though, not a day trade. All right, now GoDaddy. Hey, now GoDaddy. Now see, it's extended a little bit intraday. So your stop would have to be Friday's high for now, but that's looking good for a top. All right, Costco doing good. What?
TMUS popping.
Yeah, we sold into strength Friday. Yeah, it got a positive Barron's article. All right, APTV, we have a put spread, but it's fine. Core, yeah, looks lower. And GoDaddy 5-minute low maybe, but you need a big stop. Cart. All right, Cart. Let me check the puts. I gave this as a long put idea. Yeah, I actually put the TMOS in the trade review video this weekend. 24